Today we'll break down TradFi banks versus DeFi banks. That's right, it's going to be a big one. My name is Paul Barron. Welcome back into the show. I do want to thank our sponsor, and that is iTrust Capital. Check out itrustcapital.com. All you have to do is jump over there. Use our code as well. It's going to get you a $100 funding reward, and this is where you can set up your own crypto IRA, self-directed, very easy to manage, and also very easy to set up. So check that out. It does help the show. Let's get into our first clip today, and this one is to really break down the news of tokenized money markets coming in from BNY Mellon, which is one of the biggest holders out there. Take a look.
Yet more signs of crypto going mainstream. Goldman and Bank of New York Mellon announcing today they are teaming up for a tokenized money product.
They're going to try and transform the money market industry, which is $7 trillion. Soon, the clients of BNY, which is in fact the world's largest custody bank, and the money market fund's ownership will be recorded on Goldman's blockchain.
But what stablecoins can't do, and they don't do, is actually offer a yield. And so it's essentially taking the money market industry, which is 7.1 trillion, bringing it to the blockchain and making it transferable in a way.
Help me understand this. How is this then different than a dollar? What is this? Why do we need this?
Okay.
I know I'm dense. I'm struggling.
No, it's good to talk about, Ryan. So,
but how are they getting a yield? They're buying short. They're buying T-bills.
It's just a money market. You've got money markets when you're in,
So the yield's going to be like 1 cent, infinitesimal, effectively.
I'm getting close to 3.84%. You can do that, yeah.
All right, so as you can see, there's a little bit of confusion in the traditional markets of really understanding how tokenized money markets might play out. If you look at the counterbalance of that in the DeFi ecosystem, one of them, of course, being Aave, this is just showing the amount of growth that Aave has had over just the near term, and it continues to skyrocket. So we're seeing a lot of move here. And if you think about where this could go, take a look at this tweet right here, because this gets into Aave versus banks and a good example of how fast, in fact, I think they've already flipped a handful of those banks already in terms of what their deposits are in comparison. And I think this is kind of the next generation of where maybe DeFi will start to have some activity around things just like in a competitive nature with money markets. So we're going to break into all that, of course, with the founder of Aave, and of course, that is Stani Kulechov coming in. How are you, Stani?
I'm really good. How are you?
Excellent, excellent. Great to have you on the show. So obviously, we want to get into a lot of details here. Before we get too far into this, I want to show you a tweet that BTCS is doing, and they were explaining how they were using Aave. And maybe you can kind of give me an analysis of this, but Charles was talking about this, using Aave for leveraged ETH yields. So he was depositing staked ETH, getting about 3% APY, about $3 million a year, based on the 100 million. He was borrowing USDT at 5%, coming in on that at about $1.5 million, and then of course buying ETH with USDT that was staked, and you're getting that at 4%. So explain to me how companies like these ETH strategic ETH reserve companies like BTCS and others are doing this kind of transaction today on Aave.
Yeah, what's fundamental here is that this type of strategy has been available on chain. So in DeFi, where you can go into Aave, supply, let's say, ETH or liquid staked ETH. So a token that is already a portion of staked ETH in a DeFi protocol, and then borrow from the Aave protocol to effectively buy more staked ETH and redeposit into Aave. So what happens here is that you create a more leverage into your position. Mm-hmm. And I think the significance here is that now there's actually a NASDAQ listed treasury company doing this types of exposure, which makes it really interesting because they're first time using DeFi, and this is what makes it very fascinating.
So why would we not see more traditional firms starting to go this route, utilizing something like a DeFi protocol like Aave? You know, obviously Charles is doing that over on BTCS. We've had him on the show before. We explained a little bit about how this really starts to accelerate a flywheel effect on reinvesting, especially in an up market right now. What do you think is holding back other companies from jumping all in on this?
I think definitely Charles and his team are early adopters here from the institutional standpoint. So DeFi existed now over 7 years. That's how long I've been building in the space. And Aave has tremendous track record hitting over 55 billion of net deposits within the protocol. And all that value is essentially transparently accessible. Anyone can audit it at any single second.
Right.
You can quantify the whole risk exposure of Aave and whole DeFi. So it is a better, faster, stronger finance compared to these more centralized businesses that could offer the same service. So I think it's more of a question of time when we are starting to see even more companies and institutions using DeFi in the same way. And I think one reason why these companies are going towards Aave is because there is that amount of liquidity where you can actually deposit billions worth of ETH and borrow in one transaction over a billion worth of stable coins to actually buy more ETH. So it's the only place where you can actually do it in scale and also programmatically and fast enough.
Yeah, fast enough. That's the key point. What about, okay, so with all these companies announcing acquisition of ETH, are we in for potentially a supply shock right now, or a demand shock, I guess, if you see some of these ETH Treasury companies starting to compound their strategies like this? What are your thoughts on that?
Yeah, I do think there's a lot of demand at the moment, and a lot of treasury companies going for this particular strategy. And obviously, it doesn't mean that ETH will run out. It does. It might mean that the price of ETH might appreciate towards that demand. We've seen a lot of liquidity movements in Aave at the moment, and specifically on ETH. So there's some sort of additional demand at the moment. So I do think that will definitely affect, and it is in an interesting place because it is an asset that has fundamentals, very widely distributed, but also effectively it's protecting and securing a kind of decentralized computer where protocols like Aave, for example, exist, and all that value is secured by ETH. So it is. There are reasons why this is happening at the moment for ETH as an asset.
Well, it would, I would assume, start to create more impact on the yield rates. So could we see rates starting to even increase as we see this flywheel effect take place?
Yeah, typically the supply rate for ETH on Aave has been roughly in a bit over 2%. We've seen that rate even to spike momentarily up to even 9 to 12% on Aave, just earning yield on supplying Ethereum.
Right.
We've seen those rates coming down back to 4%. So I assume that we're going to be on somewhere closer to 3 to 4, as long as there is similar demand going on.
Yeah, that's significant because obviously you're going to compare this. In many cases, there's a lot of money market money sitting on the sidelines. People are looking at that in comparison. You look at how this could go into an accelerating asset and also seeing yield come into it. So a very interesting time coming ahead in terms of DeFi. I want to go to this post right here. This was an interview you had. And you were talking here about the U.S. pushing ahead, really in leading this, maybe not only crypto, but also the DeFi policy that's starting to take place. How much of an impact do you think this is going to have on DeFi in general?
Look, Paul, I think it has a major impact. I think the Genius Act has been really beneficial for crypto, specifically because it takes one category of assets, namely the stable coins, and actually legitimizes them as a potential use case, not just for traditional banks or asset managers, but also for fintech companies that could leverage stable coins in payments or getting actual yield, but all the way to big tech companies, e-commerce. And one beneficial aspect for DeFi, for stablecoins, is that stablecoins are the only way to access DeFi yield. So that's why it plays a really important role. And now with the market structure bill in front of us, I think we are entering into a space where there's more regulatory clarity around the rules of operating in the crypto space and blockchain in general. And this will create a lot of influx. So I'm actually very excited about the times we're living at the moment, because being here, building for 7 years and wanting to see more regulatory clarity. And then finally, there's actual regulation. So I think US has been done an excellent job on highlighting how important crypto is and how much it can actually bring a lot of value into the economy. And one of the biggest actually buyers of treasury bills are these stablecoin issuers. So it is that significant and relevant for the economy as well.
Well, and many people, I think, are even underscoring the potential impact this could have, because this could be literally multi-trillions starting to come into the market, especially around what we'll see not only with market structure, but even with stablecoins. I think stablecoin is still undervalued. Many people are pointing at like 2 to 3 trillion. I think it could be well in excess of that in terms of exposure, which is only going to give opportunity to platforms like what you guys are doing. Speaking of stablecoins, I want to jump over to GHO, which is obviously one of your products out there. This is a stablecoin. Explain to me how Aave is using GHO. What is its use case? Give me an example.
The way we actually created Go was that borrowers in the Aave protocol, they typically have variable interest rates. So the interest rate curves are based on supply and demand. And that ensures that there's always liquidity. So if someone borrows all the liquidity out of the protocol, the rates will spike and new liquidity will come in. If someone withdraws, rates will spike, new liquidity will enter, and in many cases programmatically. Now with Go, the idea was that we provide actually for these borrowers more predictable borrowing costs by setting borrower rates based on governance decisions by the Aave DAO. And that effectively was how Go was created. But what is interesting about Go is that the backing itself. So Go is backed by these decentralized collaterals, essentially these positions that the Aave users are using their assets as a collateral when they're borrowing Go. So Go is more of the resilient stablecoin side of the whole stablecoin spectrum. And now, why it's important for the Aave DAO as a kind of a business line is because 100 million borrowed Go is creating the same amount of revenue as, for example, 1 billion worth of USDC for the Aave DAO. So that has a really high multiplier because there is no LPs on that borrowing transaction essentially. So it is a really strong business line for the Aave DAO, and that's quite important.
Let's get into another area that is potentially going to gain exposure within Aave. One, of course, is tokenized assets. So this is you talking about how this could unlock 10x efficiency in DeFi. Explain a little bit about that. How is this not only tokenized assets, but also ETFs, et cetera, that could start to make their way onto Aave?
Yeah, I find tokenized assets quite fascinating because effectively, once you bring them on chain, there's a lot of benefits there because you start accessing the DeFi infrastructure. So for example, within the Aave ecosystem, we use the Aave protocol for native crypto assets. So collateralizing Bitcoin, collateralizing Ethereum to borrow stablecoins. But at the same time, the same infrastructure can be used to cater more traditional assets that are existing on chain. So for example, that might be BlackRock's BUIDL money market fund that can be in the future, let's say an SP 500, and any types of asset that even go higher on the risk curve or in volatility. And when you're using a DeFi infrastructure, it means that you can actually have a better access to liquidity. So typically someone who wants to borrow against their assets in the traditional world, you're limited to certain opening hours and limitations also on weekends, limitations of how much you can borrow against. You are in a very limited world. But on chain, you have a bit more flexibility. You can access to the liquidity on 24/7 basis by borrowing against. You might have better actually borrowing power against your assets. So this kind of like an open infrastructure and open playing field introduces more flexibility, more competition, and also transparency over your assets. And I think that's why I'm very bullish using tokenized assets to borrow against within DeFi.
This is going to be huge because if you look at just what Robinhood's strategy has been, obviously launching tokenized assets, they did that in Cannes here recently. This was an interesting tweet out there talking about whether or not Robinhood would use Aave. And this, of course, obviously using Arbitrum. We've talked about this on the show before, but Stani, why would Robinhood not use Aave?
Yeah, I have the same question. And I think that's a really important infrastructure, to be honest. Down the line, Aave is already really well applicable to native crypto assets. And with the horizon, it's going to be very applicable for traditional assets. So it's a question of time when fintechs are going to basically integrate Aave into their infrastructure to allow this kind of benefit for the users. So Aave kind of becomes a backbone for all of the finance, and in some ways a DeFi mullet. So you basically have a fintech or traditional kind of like an operator running a business in a centralized way, but in the back end they have this Aave infrastructure as automatizing the transactions, ensuring the safety, the best execution. And this is actually why Aave has grown so much, because decentralized finance in the earlier generations, when it comes to crypto-backed loans and so forth, they really failed on these risk mitigation tools and their risk management and transparency. And that's why a lot of and virtually all of the lending moved to on-chain, and Aave has been able to capture a lot of that market share and become a leader.
Yeah, this just seems like a no-brainer to me for someone like a Robinhood to go in this direction, and probably others, most likely, because we will see, to your point, is fintech starting to leverage against this as tokenized assets start to really play into the market. I'm looking at the chains now on Aave, and if you look at the comparison here, the biggest Aave chain in 2025, and I'll kind of showcase, obviously there's Arbitrum right now, but there's also Base and Avalanche in here as well, both of which have been growing exponentially. Base, of course, very active in terms of growth. Prediction-wise, which do you think is going to be the biggest chain on Aave by end of year? What are your thoughts there?
I have two kind of predictions. I do believe that mainnet will keep growing, and that's where a lot of the liquidity will exist. But I'm extremely bullish on Arbitrum. I find it kind of like a really neutral playground for a lot of the DeFi participants. There's obviously the Robinhood chain coming into that Arbitrum ecosystem. So I'm super excited to see more growth there. I do see also that Aave will grow on Base, and we also recently built a non-EVM version of Aave in the Move language that is going to be deployed on Aptos. It's important that actually DeFi exists everywhere, because it should be able to power any types of use cases that exist on chain effectively.
I'm looking at your merit rewards. Explain how this works.
Yeah, I mean, merit is kind of a simple rewards program. So typically when you supply assets into the Aave protocol, you earn a certain type of a rate. So merit is kind of like a rewards program that is built on top of the Aave protocol. So when you do certain types of actions, you basically earn additional yield. And these different campaigns, they depend on their different goals. There might be, in most cases, purely external incentive programs offered by stablecoin issuers or third parties, or more natively by the network itself. It's actually quite a well working program at the moment.
Yeah, I like it, and of course we haven't seen a lot of innovation in that area outside of what you guys have been able to do. So kudos on your side.
Yep.
Also looking at your family of products, many of you guys will probably recognize Aave Labs, of course, but you may not know about Family, the wallet. There's Lens Protocol, and of course, Go, the stablecoin. Can you give us any updates to watch out for coming up?
Yeah, a lot of actually development is happening on the Aave side, in the sense that we're building the Aave v4, which is a completely next generation lending protocol that focuses on kind of like being able to create different risk profiles while maintaining capital efficiency and avoiding liquidity segregation. So Aave v4 is going to be a big thing for us, and we're going to launch a new application, a new interface that comes with the launch itself. Horizon is another project that we are going to launch very soon, and that's essentially where you can use RWAs as a collateral to borrow stablecoins. So we're super excited about that aspect quite a lot. So there's a lot to come from kind of like overall from Avara and Aave Labs.
It's exciting times, that's for sure. You think about the two biggest, I feel like the two biggest liquidity pools out there when you look at community and opportunity is going to be XRP and also Solana. What is the likelihood of having XRP and Solana within the Aave ecosystem?
I think they will come in different wrap forms, wrapping these assets in having them on EVM. That's the kind of like a short-term, I would say, path. But I would like to see, as part of my kind of idea of having Aave everywhere, seeing Aave also down the line on Solana and in the Ripple ecosystem. And I think Aave already has the biggest pool for RL USD. So that has been a really significant accomplishment.
Yeah, I'm looking forward to that because I think that is alone would probably supercharge what you guys are doing in terms of just exposure, because the amount of carry along assets, because many of, whether it's Ripple or XRP holders and even Solana holders, they have so much exposure to most of the crypto ecosystem, so they're already probably within the network. So definitely going to be something to watch very close. I'm very excited about your new products, so especially on RWAs, because that's something I think that would be pretty exciting for what could happen with Aave in the future. All right, Stani, hey, listen, it was great having you on the show today. Thank you so much for coming in on such short notice with everything happening in DeFi. It was perfect timing. So thanks again for stopping in.
Thank you so much for having me here, Paul.
So you guys are not in the Diamond Circle. That's our own private newsletter that you can be a part of and join over 250,000 other people on that. All you have to do is click the link down below. And of course, follow me on X @Paul Barron. We'll catch you next time right here on The Paul Barron Show.